Hi, I'm David Grossman, the Mortgage Mensch. I think there's a perception out there that if you don't qualify for a mortgage at the bank, sure, somebody might loan you the money, but what can you expect to pay? 8, 9% on a first mortgage? Exorbitant rates? Well, that's not the case. Today I interviewed Aris Athanasoulakis, a senior commercial account manager from Equitable Trust. Take a look what he had to say. Hi Ari, thanks very much for being with us today. Appreciate you taking the opportunity to meet with me. I wanted to ask you first of all, Ari, why would somebody borrow money from Equitable Trust? Wouldn't they just go to their bank?
David, first of all, thank you very much for taking the time to meet with us today. It's a pleasure meeting you. To answer that question, there's various reasons why somebody will come to Equitable Trust as opposed to their bank. The key reason, most of the cases we find, is the quick turnaround time. We found the banks have all these layers of approvals and they have to go through, and we find it very frustrating for our clients. So what we like to do is we like to respond quickly to our inquiries and make sure that we provide the right information to the client to make a decision on their properties. The other reason is we find the banks tend to move in and out in certain types of business that we are very consistent and very stable over the years. Other reason is potentially more money for our clients.
You mean like higher loan to values, smaller down payments?
Yeah,
okay.
Higher loan to values,
right.
Exactly. Smaller down payments, and the key thing is here is, I guess, we're a little bit different in terms of our underwriting. We use more of what I would say common sense underwriting. And just to elaborate more about that, what I mean is, we don't tend to focus on certain aspects of the deal, either being credit or income confirmation. We want to know exactly our borrowers. We want to know why the client's buying the property. We want to make sure it makes sense for them as well as us as a lender. And that helps us, I guess, to structure the deal properly and provide your clients with good service, good responses, quick responses, and most importantly, make sure the deal's fun. Okay?
Okay.
And also with us, there's a perception about the pricing, but we also offer competitive rates for your clients.
Right. Well, I know there have been times where sometimes people are trying to get financing to buy a property, commercial or residential, and the banks are asking them for a lot of paperwork. And I know that Equitable Trust is one of the lenders that looks closely at the property to determine whether the deal makes sense. Will people expect to pay a lot more if they're going with Equitable Trust as opposed to their bank?
No, not at all. And I'm glad you brought up that point. That's exactly correct. What we're going to look for is the real estate. That's really what we'll end on. If we like the property, it's in our market, and it's a property that we're comfortable with, that's the starting point for us. Then when we look at the borrower, you're absolutely right. We're not going to ask for all this documentation the banks ask for. And the reason being, again, is going back to my other point, is the common sense underwriting.
Right.
To give you an example, you have your typical, self-employed, business for self, hardworking individual that is on this, retail variety store for a couple of years. And he's paying rent, and now he feels it's time for him to buy his own property. Go to the bank's going to see, okay, well, show me your financials, show me your income.
Right.
Obviously, self-employed, as you know, sometimes there's a lot of cash business involved. Not quite fit the traditional bank guidelines, and that's where Equitable Trust can help.
Okay.
Because we can look at the overall picture. We can look at how many years the client has been in business. We can look at the type of business that he's in, why he's buying the property, and does it make sense?
Right.
In our eyes, it makes sense, because if he's paying $25,000 a year for rent, why not paying in a mortgage, own your own property, and in most cases buy a mixed-use property, which is pretty much our niche,
right?
Where he can take advantage of his rental income upstairs. Okay,
so a mixed-use property. So for an entrepreneur, let's say, on paper isn't necessarily looking great. I mean, let's face it. Any good accountant will have a person, minimize what they report at the end of the day for tax purposes, and then sometimes they can go to the bank and have a difficult time. But so a mixed-use property, could be like a store or some kind of an office, I suppose, on the main floor, and 2-3 units above, for example?
Yeah, exactly. That's correct. Yeah, that's what we consider mixed use, a commercial residential component. To give an example, typical properties you see along Yonge Street, like the Danforth, Queen Street, where you have a small retail shop or an office, as you mentioned, and apartments upstairs. That's probably 90% of our business right there, and that's what they want the property types that we're very comfortable with. This is our market, and and that's where it could be more competitive and aggressive relative to the banks.
Okay, so what would people, for example, what could people expect to pay, and what sort of down payment would they need to make?
We can go as high as 75%, which basically the highest conventional loan to value we can go on. So minimum 25% down. In terms of pricing, again, we don't post our rates, and the simple reason being because we feel each deal is different and unique. To explain what I mean is we tailor each loan proposal we offer to a client according to the client's needs. So we might offer a variable option, which these days is roughly about 1.25, 1.5 above prime, or we can put them on a 3 to 5 year fix, which is roughly between 5 and 6%.
So that's pretty impressive. I mean, 1.5 points above prime is currently 3.75%.
That's correct.
So I think is interesting because probably there's a perception out there some people have that if they don't qualify at the bank, sure, somebody will loan the money, but what are they going to pay, 8, 9%? And that's not the case at all.
Absolutely right, and that's not the case. And also we offer 25-year amortization as well to help them with make sure they we don't kind of put them strain on the payments initially. So Equitable Trust base is not here to to take the business away from the banks. It's more here to offer a solution to the clients, a good solution to the clients when the banks don't want the business.
Right.
And we do that by making it to the clients. We offer competitive pricing, flexibility in payment options and prepayment options. So we're here to provide a solution, basically, not to put the clients into a difficult, situation because their banks don't want the business.
Right. Okay. Well, Aris Athanasoulakis, thank you very much for taking the time to talk to me today. I appreciate it, and hopefully we'll be sending you some business as a result of this video.
Thanks, David. It's been my pleasure. Looking forward to it.
Really appreciate it. We'll talk to you later.